Hey, what's up, everybody? It's Stephen A. Williams, president and founder of thecreditrepairshop.com. And in today's video, we're going to talk about the FICO scoring model. There is a new FICO scoring model that is going to be introduced. It's been around a little bit, but it's a lot of companies are going to start utilizing it. And I'm going to talk about the benefits of it. I'm going to talk about the changes. I'm also going to talk about the older scoring models because companies are not required to move to the new scoring model. So you may have checked your credit and you're wondering, why is my score different with one company over another company? It could be completely because they're using a different scoring model. So first, let's talk about the and before I do that, please subscribe to the channel. I need to get those numbers up. We just crossed 50,000 subscribers, but I think we could do a better job. Please, if you have not yet, please subscribe to the channel. You will be able to judge for yourself the content that I make available, and then you could say, hey, I want to stay subscribed. So let's do it that way. Please subscribe right now. So here are the score models. You got FICO 2, and this has been around for years. Like, this is nothing new, but you have FICO 2, FICO 4, FICO 3. FICO 5. I don't know why they didn't put a FICO number 3. I have some suspicions on it, but I won't get into it in this video. It has nothing to do with anything with credit. It has something to do with superstition. So yeah, FICO 2, FICO 4, FICO 5, FICO 8, FICO 9. Now, mainly the mortgage companies, but other creditors also used it at that time, but mainly mortgage companies, they are still attached to the 2, 4, and 5 FICO scores. Now you might be saying, well, what is the difference? There's really not much of a difference. What it is a data matching system. FICO 2 is mainly used by Experian. FICO 4 mainly used by TransUnion. FICO 5 mainly used by Equifax. Now, this is the way that they do it. So each of the bureaus are independent. This is something that a lot of people still don't understand. They think that these companies are like all together. They work together. They're on each other's team. No, they're separate companies, and they're fighting for corporations or lenders to become a member with their company. And companies could be a member with all three. That's not a problem. But where what the companies, these bureaus, TransUnion, Equifax, and Experian, what they fight over though is who is going to be the main supplier for that company that is providing credit. Because if they don't need to approve someone utilizing 3 scores, which is usually only for mortgage lending, they want to be able to get their other business that they just need to get one bureau for to go do their credit checks to approve someone for a loan. So what the mortgage companies do is they're signed up with all 3, but they base everything and utilize the score system from one of the 3. FICO 8 is for autos and credit cards, even though the other companies can use the other bureaus, but it was mainly an update from the way that I understand it, for autos and credit cards on how scores could be figured to actually help people get into autos a little bit easier. And then FICO 9 is the newest one here that we'll talk about, the newest version. It's not widely used, but it is starting to get some head steam to where a lot of companies are going to start utilizing the FICO 9. So we're going to talk about some of the differences between FICO 8 and FICO 9. So now let's move forward here. So first, let's talk about FICO 2, 4, and 5. It's similar. They're really very similar, and some lenders outside of the mortgage industry still use it to this day. So it's not like all lenders have switched over, and it was not a requirement to switch over. Mortgage companies pull from one main bureau, then the duplicated data. So they pull from TransUnion, Equifax, and Experian, and then anything that is duplicated, they just remove that's what's going to be with their main bureau. They're going to say, well, okay, I'm a member of Equifax, and all of the data that I got from the other two bureaus was duplicated, so I could just remove that because everything is consistent. Mainly what they're looking for is anything that a creditor maybe wasn't reporting on all three. That's where they're looking for the differences. And then what they'll do is they'll combine all of that after they remove the data, and then they will then do what's called a rescore or an average, and then they'll have your middle score. So have you ever heard, you're sitting with your mortgage lender and they're like, okay, we got your three, and then we did an average and we got your middle score. A lot of people, everybody thinks that they're just like averaging up the scores. No, that's part of it. But a lot of people don't know that they're removing the duplicate data, and then they're assessing what is on there from one bureau that may have not been on there from the other bureaus, and then they're doing a rescore. A rescore can be done based off of new information that has been attained. So they can do a rescore on your credit, and because it wasn't reported on another bureau and they're using one bureau, they can actually jump your score. They could give you additional points for that. This is all stuff that's done in the underwriting office. A lot of the people who are the mortgage sales reps, that's what I call them, the people who write the application, the applications, does all the stuff, they don't know about what underwriting is doing. These are some of the things that underwriting will do, is they'll do that rescore. They'll see what's duplicate data, and then they will combine all of that information and get one complete report, and then they'll do a rescore, and then they'll call it a middle score. Because if they were to, tell you all of this stuff that they were doing, it would just confuse people. But that's basically what they're doing. And again, to reiterate, other lenders, credit cards, automobiles, they're all still using, not all, but a lot of them did not switch over, and they're utilizing the FICO 2, 4, and 5. But I wanted to go through this one here because when people are going to buy a house, you need to understand that you're going to be on this scoring system, which is when you look at this one here, this one here has less updates that really benefit the individual. Because when they're doing a high mortgage loan, these are not small loans like an automobile or a credit card. They want to make sure that everything checks out, because it's going to be a lot of money that's going to be lent out. So now let's move to, and I got something good for you. I'm going to show you all of these different FICO scoring systems that you are probably not even aware of. I wasn't even aware of all of them. I'm going to show you that in a second after I go through this. So FICO 8 and 9, FICO 8 versus 9, the major differences. There's some other subtle differences on there, and I can tell you that one big benefit that I read about with FICO 9 when it goes into place, that I think it said over 40 million American score would go up. And then I think it said about 20 million would go down. And it was based off of this information that was right here. And so I'm going to tell you how you can utilize that to help your scores go up. So some of the main differences is that FICO 8 factors all collections that are over $100 or more into the scores. So FICO 8 had a lot of pressure if someone had collections and it was over $100, it put a lot of pressure on the scores. Some people, like when I would review credit reports, this is something that would be crazy. So someone could have a whole bunch of collections on their reports. And I even think that this number here might not even be true. I think that, they say $100, but I think that it's even affected when it's even lower, because I've seen it where people's scores were even affected when the balance on the collection was even lower. But something that I had saw is that an individual would have one collection, and then another individual would have multiple collections, and they were still penalized still had similar penalties for having those collections. And the way that I read it, the way that I saw it, and I've reviewed a lot of credit reports, is that basically with FICO 8 is that you were going to be, if you had collections on there, you were going to be penalized pretty tough. If you had any collections on there, it was going to be a tough penalty. I think that debt collectors love FICO 8 because it allowed them to be able to put a lot of pressure on people by holding down their scores for having those collections on there. Another thing with FICO 8 is that with a late payment, it weighed heavily against your scores. Even with just one late payment, it would weigh heavy. Like, if you think about it too, and I've made videos about this, you can check that video out on late payments. Think about it this way: if you had late payments and you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We'll just keep it at that so we don't have to have all the numbers across. But if you had good payment, missed payment, or late payment, let's just say late payment, having that one late payment in there, it would actually take you double the amount of time of making payments on time to be able to get rid of that late payment showing on your credit reports before it would stop affecting you. That's why it's very important to not have late payments, because if you have a late payment, it can end up affecting you for a longer period of time. And FICO 8 took, like, that was a heavy weight on there. It was like 35% of your scores were figured on if you had any late payments. So one late payment, two late payments, all of that stuff factored in, and it made you have to have a long mountain to climb, because they're not going to always take away that late payment. And some of the times what happened with creditors is that if you were to dispute a late payment, they could take it the wrong way and put it into the wrong pile and put it as ID theft, which some companies were doing that, and they were closing out the account. So to avoid all of that, you just don't need to have any late payments. I know that sounds easier said than done, but you got to take care of your finances and make those payments on time, because it could just hurt you so much to be able to make up this time. Look at this, even on the back end, you'd have to go a whole nother full cycle to get this here erased. So be very careful on that. And then another thing with FICO 8 is that they were heavily weighted, and some of these are on both, but what I'm mainly breaking down is the main differences, is that the 30% utilization of credit cards, of open available credit cards, that weighed very heavy. And something about, so I can kind of connect some dots for you. FICO 8 came about in 2008. What was the main problem that was going on in America in 2008? We were going through the financial crisis. And so people maybe even made all their payments. They didn't miss any payments, but they found out that people couldn't really afford it. They had good credit, but they couldn't afford the things that they had. So with that change with FICO 8 in 2008, they put pressure on the scoring process, or the scoring algorithm, with saying 30% of your utilization. So if you have a $1,000 credit card, for example, they don't want you, even though that's available to you, that sounds crazy, you should just be able to use all what you want. But because of what was going on, people were overfinanced. So what they want you to do is say, you got $1,000, but if you use $300, or if you pay it before the statement date, we're not going to penalize you on your credit score. Another thing that I saw that was a main difference, because we had the credit repair shop actually started 2 years before FICO 8 was instituted. And one of the things that I saw, especially around that time, is that people, when they had too many inquiries, it was hurting people's scores. I'm talking about at where people for per inquiry, when we would add it up, we were like, from what you used to have from what you have right now, you're dropping at least 2 to 3 points per inquiry. Now, another thing that had happened at that time was that when they made those changes, it also allowed auto dealers, which they a lot of them wasn't using FICO 8. I'm going to show you the ones that they were using, but auto dealers, it was making it a lot easier for them to be able to approve people for loans. Remember some of the commercials that you heard back at that time? Bad credit, okay. Bankruptcy, okay. We can get you approved. All of this and that. And what they were doing is they was blowing up people's credit reports with all of these inquiries. You've probably experienced that. You went to one auto dealer and they ran your credit with like 20 different finance places. And we started getting reports in and we were like, man, why did you have all of those inquiries? They would say, I just went to one place. I didn't do all of these places. And we had to start, doing those disputes saying, hey, this individual did not sign any application to go to all of these people, and they would remove them, and we would see that jump in the scores for the individuals. Now, let's move over to FICO 9. FICO 9 does not count medical bills as hard as FICO 8 used to count them. FICO 9 ignores zero balances on collections, and with the credit repair shop, one of the things that we talk about with people is that, and if you have watched my videos, I have an 8-point validation process, and we have a 2-phase settlement process. Part of the 2-phase settlement process is to allow people to be able to move forward. There are some accounts that you're going to have to settle. I'm not going to be one of these people that say you're going to just be able to get out of paying every account. There's a verification process with the bureaus. There's a verification process with the furnishers. If they fail those two processes, the one could fail, come off of your credit reports due to inaccuracy. Number two could fail because of inappropriate documentation from the original creditor or from a debt collector who purchases the debt. So that information can come off. But if it is settled, which we do a lot of assistance with settlements for clients, and it has a zero balance, that zero balance with FICO 9 is not going to hurt you with your scores. Another thing is the rental history will be counted. And there's different products that are available out there that can get rental history reported to your bureaus. And then the subscription payments that you make to the apps and cell phone providers that may be not reported to your credit reports, that you're paying month after month after month, cable bills, all of those are going to also be able to be figured in the FICO 9 score. And there's some other smaller things that are on there, and I'll make other videos to kind of make you aware of them. But these are the major things here. And then also keep in mind that 40 million Americans' scores should go up because they're not going to count medical bills as hard. And then if you do have some collections that you paid and they're zero, those are going to be able to go off. And then the rental history, that's getting more and more popularity to where the bureaus are going to be adding those products across the board. Now, let's go into, I want to show you something real quick. Whoa. I want to show you something real quick. All right. So, and you should go here and read a little bit about this. This is my FICO. I mean, this is the company that put all of this stuff together. Now, let's look at this right here. This is very important. So you have Experian, Equifax, TransUnion. Their widely used versions is FICO 89 or 989898. Auto lending. So when they say the versions is how they're pulling in their data now. How they're pulling in their data. Let me make this bigger for you right here. How they're pulling in their data. Now, the versions used by auto lenders, 982 on Equifax is 985, and on TransUnion 984. So you may be saying, well, why was my score different when I went to this dealer and then I went to this other dealer? It was different. It could be solely due to which one that they're receiving their data to approve people for. Remember, with an auto loan, they only need to have one score. They don't need to have 3 scores to do an auto loan. They may report, or they will report to all 3. The lender will, but they only need one to figure. So that, and if you see here, the difference is if they got 9, 8, and 4, and then they got 985, 982. Based off of those models, you're going to get a different score or a different approval. You're going to be in a different approval position depending on what bureau your dealer is the finance company that your dealer is utilizing, which bureau they're utilizing. Now, for credit card decisions, you got, oh, there we go, FICO Score 3. It's in there. It must have just been something that they wasn't pushing on there. But you got, with Experian, you got 983.2. You have Equifax 985. You have TransUnion 984. And I'm going to do an investigation on number 3. There's a reason, and I still believe that there's a superstitious reason on that. So we got versions in mortgage lending. You got 2, 5, and 4. You got new releases. You have a score 10, auto score 10, bank score 10, and score 10T. Score 10T, you got all 10s, 10. So we're going to go into seeing what that is. It says here, how do lenders use new FICO scores? When the new FICO score version like FICO Score 10 or FICO Score 10T is developed, we release it into the market. From there, each lender determines if and when it will upgrade to the latest version. Some lenders make the upgrade quickly, while others may take longer. This is why some lenders are currently using different scoring versions of FICO Score. As an example, FICO Score 5 at Equifax is the FICO Score version previous to FICO Score 8 at Equifax. Boy, that confuses people. Other FICO Score versions include industry-specific auto and bank card versions are also included in FICO Score products on myfico.com, so you can see what most lenders see when looking at your score. So this is some very, very good information, because some of the times what I see with people, I even went through this with myself before I got a little bit more educated about how, the algorithm works, is that you're wondering, like, I went to this place and my score is this, and then I went to this other place and my score is this way. It's simply based off of which scoring system they're utilizing. Now, I can tell you, now this is my own opinion on this, is that certain lenders benefit more by staying on one FICO score based off another. I think that with credit cards, with auto lenders, anything that deals with either autos or subprime type lending, they're always looking for a model that will allow them to be able to justify making loans to people. I mean, that because you always see that there's upgrades and changes, and if you really just went down to the root, why are these changes? And when I look at it, it's always changes really to be able to enable us or banks or companies to be able to say yes to individuals to finance them. But we all know that there's steep penalties for some of those yeses. So you have to be very careful. You got to be very careful, because we all know that the systems that they put in place are to benefit them. It's to benefit the bureaus. It's to benefit the individual companies. And it's there to benefit us if we understand how to utilize it to maximize the use of it with these lenders. I think that that would be the best way to put it. All right, I'm going to end the video here. Please subscribe to the channel if you haven't done that yet. Post your questions and comments. Go to the website for myfico.com, because I mean that they're the people who put the algorithm together. Why not study and learn more about that? I'm gonna be making some more videos on stuff that I always get from there when I'm looking at different issues that may come up with our clients, and we're trying to figure out why their score either dropped or even why their score jumped up high. One big difference that they said with FICO 8 is that FICO 8 did not weigh as heavy on individual scores being moved up by using authorized user accounts. Well, I don't know if that was 100% true, but I could tell you that AU trade lines were allowing individual scores to jump up. Now, what might be a difference is that when they go into the underwriting process, is that they may not figure it as much as they do. And that would mainly be for mortgages, because I know from just hearing testimonials from clients that they've used AU trade lines and left them on there for a little while, and they were able to go get a vehicle or even a credit card later that was had a substantial available credit, or they were able to get a card approved for a card with a decent interest rate. All right, so again, please subscribe to the channel. Please post your questions and comments. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, what makes us different, so you can see my 8-point validation process and my 2-phase settlement process. If you need your credit reports and scores, go to the website your3scores.com. We also have a FICO version if you want to see that version of credit reports also. Link is below this video. If you have debt collectors coming after you, go grab my 3-pack of letters, statute of limitations, cease and desist, and debt validation letters that will help you. Please make a donation if you decide to grab the free pack. It helps for my time here on the channel. Thank you for your time. This is Stephen A. Williams, President and Founder of thecreditrepairshop.com.